Like Bitcoin is a not get poor slowly scheme. I think I
Right.
agree with you on that front.
Yeah.
Yes,
Yeah.
sometimes the returns look unbelievable, but I'm sure I saw a James Lavish bit of research recently that clearly shows that like there's roughly 9 days a year when most of the gains in the market are made. And so if you're out of the market for that particular period, you missed it.
Right.
So basically it's fucking boring.
Yeah.
For
Yeah.
300 and
Yeah.
however many days, you just got
Right.
to sit there and do
Yeah.
nothing. And that's cool, but it's like my attention wanders. And I love this idea of like venture capital investing, for example.
Mhm.
And so it's like, okay, what if the new risk-free rate is not a government bond paying a few percent, but actually it's sitting in Bitcoin self-custody? What can you do to beat that hurdle rate? And do you even bother trying? And I'd love to know, like, from your perspective, how do you think through that?
Well, I suppose it depends on what stage of your life you're at. And I think this really depends on whether you're in the wealth building stage of your life where you're trying to, grow your capital, or if you're in the wealth preservation stage where you've got capital that you want to make sure that doesn't erode away. It would be different for everyone. I think that to your point about, Bitcoin as the new hurdle rate, I kind of tend to agree. I think that it is. I mean, no matter who I'm talking to, whether it's my daughters or my son who's 16, I'm basically saying any excess capital you have right now, no matter what your long-term goals are, deployed into Bitcoin first and foremost. Any excess, So I mean, I think that's, as you said too, to have that base is fantastic. Then on the point of trying to beat the hurdle rate, and I think I would probably go back to my analogy of, if you're going to invest in yourself, that's probably the best way to do it. Not that being an entrepreneur is for everyone, but if you have the potential to go and start and build a business, my guess is certainly in the early years, while you're building that business, if it's successful, that growth rate will probably exceed Bitcoin's hurdle rate. So,
Mm.
if you go from 0 to a million in revenue in a business over 3 years, that's a hell of a good growth rate. And then you stabilize and build that business a little bit more slowly over time, but invest those profits into Bitcoin to strengthen your balance sheet and your overall financial picture. I would say that's a hell of a good bet, on
Mm.
yourself and on Bitcoin. And I think that may be a way to have lightning in a bottle in a way.
That's a great point. So, and again, just to share about my own decision making, I struggle to see the benefits at this stage of putting money into a venture fund, for example. So someone might want 250 grand US to invest in their fund. It's like, okay, well, what are you going to go and buy? Well, there's like 4 or 5 funds operating in a space that I think are interesting, and they're often co-investing in deals. So there's not really a huge amount of point putting money in all 3 funds or all 4 funds
Right.
if you had that capital.
Yeah.
But then it's like, what's the actual return profile on this? It's like, well, okay, it's all going to be highly illiquid early stage equity that you may or may not get back for an unknown time horizon. And it's suddenly like, this is hugely risky.
Right.
And it's like, okay, you could take that 250 grand and plow it into your own thing,
Mm-hmm.
not have a shareholder except for yourself, and try and hit $1 million worth of revenue. And there's, at least a couple of X on your investment. And so that actually that resonates very, very strongly. And so where does that leave the venture fund? Is there money out there that still wants to take that kind of bet? And equally, I said this yesterday with Lewis, shout out to Lewis from Mimesis Capital, Lewis Liu. What if Bitcoin's just like Ferrari and it's parked in the driveway, but there's no roads? The infrastructure just doesn't exist yet, right?
Yeah. Yeah.
You got to go build it. And who's going to build it? It's going to be companies. And someone's
Mm-hmm.
got to take a risk.
Right.
And it can't just be a bunch of solo entrepreneurs backing themselves, because they won't do it far. Well, maybe they could. I don't know. Yeah, just help me think through that. How might that future world look?
Are you talking about like venture
Well,
funds that are investing in
yes.
Bitcoin
So,
only companies? Like for
yes,
me,
in that.
that is, much needed in the space, and we're talking to lots of these companies, on a regular basis,
I'm
because they're
sure.
they're developing a lot of these great solutions that they have to figure out a way to get in the hands of users, and that's kind of where we fit in. So we're actually working with individuals on a day-to-day basis, helping onboard people getting them into Bitcoin. And so we're an awesome channel for those companies to get their products in the hands of users. Because, and to use your analogy of the Ferrari with no infrastructure, I think all of us will probably, have a view that one way or another, Bitcoin will continue to grow in purchasing power value over the long term, but it will be probably accelerated even more if there's more ways to use your Bitcoin. Because I'm sure you've encountered people on a regular basis that say, "Yeah, that's all well and good. Bitcoin's great, but what can I buy with it?" 10 years time, if you actually can transact, and buy a house or a second house or get a really well structured loan against your Bitcoin that isn't marked to market every minute, those kind of things will be hugely powerful for the value of Bitcoin to be deployed as an asset that can be utilized as opposed to just stored. So yeah, I mean, I'm super hopeful that that kind of stuff happens. So in that sense, investing in venture funds that are Bitcoin focused, that have sort of that need to deploy capital to grow that infrastructure is valuable. And I myself also am interested in investing in those types of opportunities. Now, the flip side is the conventional sort of fiat minded venture funds that are just focused on, growing revenue, not profitability. That's, in my opinion, much less sustainable, because in a world where the money is real, you can't have those businesses anymore that basically just only grow. They're basically early stage zombie companies, and they're only growing by virtue of the fact that they can raise capital and then they go public, and that's kind of the way it is. So I think that for businesses to be sustainable over the long term, they have to be cash flow or Bitcoin flow positive. And I mean that those that do deliver true value will actually stay in the market for the long term.
And so, do you think that the equity in those businesses has the ability to outpace Bitcoin? Like
Probably,
being,
certainly in the early
yeah,
years. Yeah, as you go up that. I mean,
hmm,
any new business, right? You've got a bit of a J curve, right? You're not profitable for the first part. You got to invest in the business so you grow it. But as you come out of that J curve, and if that J curve is steep and your growth is rapid, and you're realizing value in a rapid pace, as you come out of that J curve, that value growth is going to be pretty phenomenal. Now, that may not stay that way for 20 years, but certainly in the front end, I think that growth profile will exceed Bitcoin's growth rate.
hmm, really cool. And so, if you were to operate in this early stage equity space, that's what you're looking for essentially, is something with a bit of product market fit that has got a core team that you really like and has a decent market to go after. Doesn't look like it could be regulatory kind of hampered in some sense. And you try and buy equity just as it kicks off and needs the extra capital. And I mean, I guess the liquidity moment is harder to see in a sense, because why would you IPO if you're super profitable? I don't know, but it's
Yeah.
really really cool to think through
It's
this
it's
because
a it's a bit of a paradigm shift, I think. I mean, most
yes,
often companies IPO because they want access to further capital markets, right? They want more
yes,
capital to have access to. Whereas that's kind of conventionally the why businesses stay private is because they're cash flow positive. They're generating a positive return profile for their owner or owners, and they don't need access to more capital because they've got either the cash flow is strengthening their balance sheet generally, and they have opportunities to pursue with the excess cash flow within their business, or they can, borrow at a relatively low cost to take on new projects. So typically, I mean, access to capital is, required for those businesses that have that potential. They haven't hit the cash flow mark yet.
so maybe then there's a space for kind of early stage equity investors that are coming in early enough to get those higher risk bets off the ground, but then there'll be
Mhm.
some kind of like private equity growth type phase where businesses aren't taking as much risk. They've done more growth. They don't necessarily need the public scrutiny of public markets, and
Mhm.
therefore they can go and mate, that's interesting, isn't it? Yeah, because it's Bitcoin just changes everything, like
Mhm.
in terms of like how the balance sheet looks. Like the growth curve is actually like productivity down. Been really screwing with my head
Yeah.
recently, where you start
Yeah.
looking at a business, you're like, hang on,
Yeah.
sorry, so because it's priced in Bitcoin, which is getting more valuable, the good sign is actually coming down. Like, whoa.
Yeah. The other thing that's still will still be needed is, for a new business to start up, they still do need, that equity risk capital, that first loss capital, even if they're a
Mm.
Bitcoin company. We see great businesses that have a great idea that won't, that, it just by virtue of the market won't last, right? I mean, even in the venture space in the Bitcoin only world, there's still going to be companies that fail, even if you think they've got the best management team and a great product. Not all of them will succeed, so there still will be risk there for sure. So if you can pick only the winners, man.
You'd obviously approach it um, with that attitude. It's like, yeah, we're going to be really, really, really good at choosing the right companies.
Yeah.
But equally, you're not going to get it right every single time. And
No.
that's okay, as
Yeah.
long as you've got in early enough, and therefore the equity upside for each investment has enough potential to pay off the ones that don't work.
Mhm.
What I think.
But it's back to your point before about decision, right? So you're basically, if you are deploying your Bitcoin into those investments, you've made a decision that you're not using that Bitcoin for other things.
For something
So
else,
that really becomes the decision that you have to make. Am I going to put my money into these venture funds with the expectation that I'm not going to see the return for 10 years? Am I okay with that?
Yeah, to iterate that one further. I think what I'm digging around for here is justification for doing that. And so I'm looking for a pitch in a way that's like, that makes sense.
Yeah.
Because if Bitcoin's just going to crunch away over the next decade doing its thing, I'm actually up for taking more risk,
Mm-hmm.
because that's my risk-free return, and it's going to do very nicely. Thank you very much. And so
Yeah.
1%, 2%, 5%, however much you might want to make it as a portfolio allocation, you go, well, hell yeah, let's take some risk. The
Right.
question might then be, is it the right timing? Do you do it now, or do you do it in 2 years' time or 4 years' time? Because I think a lot of it's really luck. Or in some
Mm-hmm.
ways, maybe you just have to DCA into early stage equity over the next 10 years and just see what happens.
Right. Yeah. Yeah. The other thing is too, I mean, it would be really great if you could find a investment fund, and I think there has been some talk about it, that is denominated in Bitcoin. So let's say, for example, instead of expressing your investment at 250,000 US dollars, it's, you invest 2 Bitcoin, and that's kind of your cost basis for your return profile. And at the end, it's not based on fiat currency, it's based on 2 Bitcoin. So that's your baseline. Your
Nice.
hurdle rate is based on that Bitcoin that you would get out, and that's your cost basis, not the US dollars. So that would be a better program as well.
If one was a limited partner in a fund like that, that's a much easier sell. You give me 2 Bitcoin,
Yeah.
you'll potentially get 2 Bitcoin back plus whatever the carry is.
Yeah.
And equally as the GP doing that, well, if you're heavily into Bitcoin, that's the hurdle rate already.
Mm-hmm.
So why would you even bother doing any of this unless you think you can beat it?
Right.
And so that perhaps is how it should work.